Welcome to another session of a market review. Haven't been doing this in a while, so figured it was time to come back. Let's just jump into it. I wanted to start with the Hertha picture that has developed ever since we talked the last time, and we've encountering we are encountering a situation which, to be honest, hasn't changed ever since here. Uh, we drop hard. We chop, we drop hard, we chop, we drop hard, we deviate at times. This is still the biggest deviation ever. That fool everyone. In essence, what the situation we are experiencing now is pretty much the same as here. The amount of volume that has been traded here is now matched with the amount of volume that it has is being traded here at this area 20K below. I previously considered this to be Bitcoin's fair value at 39K. I do believe it is a match for fair value this area. 20K, I think, will be the area which will provide the longest consolidation of them all. The reason why uh, one can be technical and is the matched volume that we are already seeing. Sorry. The other reason is that the stakes are too high. Uh, uh, I believe there is not enough conviction in the market at this moment to create what we can call a bottom, or at least a type of bottom that actually provides a significant reversion, like here, for instance, like here, or like the COVID 2020 bottom that also provided some pretty significant. Forget about the pretty significant inflection point in the market. It has to create that sort of pain, that sort of, I won't say capitulation, but one side should think it's over. And then we can probably extend to the other side. But I think the market as we know it in this stage is no longer the same. So what I believe is that we will. I'm counting on a long period of consolidation before any significant break above this area, this volume edge that now is quite thick, about 23K, or the final move towards 10K, which would be our ultimate support, if you want to call it some way. But the crypto market is not the same with Bitcoin trading at these prices. I don't know. It's a situation we have to be prepared in a certain way, but I'm not counting on that happening tomorrow. And as a consequence, I'm shorting here. My focus is still in two things. My focus is in two things at the moment. One will be keep scalping with with one book. I'm scalping on a daily basis, mainly BTC, sometimes some alts. Um, I'm also holding, not holding, but trading some certain altcoins in spot when the situation is more or less suitable to do that. And a third strategy that I've started to implement is a delta neutral book. Um, that still has very little information available. So, but I will be releasing a document with that in the future, mainly in the group. The idea behind that, and why I'm commenting this on this video in particular, is that I've noticed that when volatility crushes, it gets crushed like it might happen now after a big drop. Remember, we have this whipsaw, and then we have a compressed range. After a big drop, we have a whipsaw. Here we have a huge um, extended move, but then it compresses. The volatility compresses for a good period of time, at least a month, like here, at least almost a month. So I'm counting on having a little bit more of a period of consolidation that will be boring as hell, of course. But that boring situation in the markets is good to sell premiums, for instance, to collect uh, certain money that you can make out of arbitrage. I will, as I was mentioning, I will send more information on this as long as I am progressing on that project. But for the time being, that I'm planning on trading what I consider this range, as well as selling volatility, if you want to call it so somehow. So move contracts as well as collecting funding, for instance, doing some carry trades, maybe options. I don't want to get too complicated for myself, mainly because um, it's already enough work, and I think I have my hands full with that. So that's my idea. That's my plan. Now let's continue with what I'm seeing in some charts. Sorry, I'm a bit sick this morning. What I'm seeing in some charts, and actually one of the assets that is providing with some form of volatility to trade, which is Ethereum BTC. If BTC has been quite stubborn today, I'm this on this short. The main idea behind it is to play something like this, some structure like this. I think this is a huge over and under pattern, which in itself is a good entry trigger, a reasonable entry trigger when you find it on the lower time frames, for instance, and you can spot something like that, a reversion covering this thin space. And well, essentially, this is, as you know, this will be a swing. The idea behind this is that I will be earning more BTC uh, if Ethereum goes lower against BTC, which is my view at the moment. Mhm. The reason why is that uh, if you play by this chart, this is a logical level, is a reasonable level to mean revert, but at the same time, it's a reasonable low level to look at this to extend. And why? Because of how thin this area is. So it wouldn't take as much volume to make price shoot higher, stop a good amount of people that are setting stops here. I'm not setting a manual stop here because I don't believe Ethereum can actually flip BTC and start a new run. But if it happens, I will be cutting the trade anyway. Just in this case, due to the obvious nature of where the stops are located, I'm not setting a hard one yet, but I'm monitoring this trade every day. In any case, as I was mentioning, this area above is quite thin, so it wouldn't take as much effort to to simply move price to execute a lot of volume here with market orders, take the liquidity here, and then start to mean revert. In any case, I will still aim to cover this space, this gap, and it's one of the trades I'm most interested in. Then I want to show another trade that I made here. This is one of my altcoin trades. This one got stopped. Sorry, this one it was quite the ride. To be honest. Um, what the main idea behind this was that I was noticing this type of altcoins that are being played basically by players that are collecting funding. That's why you see these huge spikes. This is not real demand. This is a short squeeze. So, for instance, this type of altcoins, at some point in time, they have a huge how can I say, a huge positive for the, sorry, positive funding. Then if you short, you are rewarded for that, or the opposite if they have a huge negative funding. If you long, you are rewarded for that. So it happens still. Here the incentive was to short at some point, same as here. What happened then? Some of the participants collecting funding and hedging spot here and here, for instance, um, they have to unload an inventory, and that inventory maybe might be way too high. They might have been oversight positions. So as soon as funding changes, it doesn't take much to to squeeze them. And as this is super thin book, you have these huge spikes in price. This is not. It looks like a pump and dump. It looks like it's some form of 125%. It looks like an anomaly. Is not an anomaly. It's the market work. It's what we often discuss in the group as well. What happens when a lot of volume hits thin books? Well, you have something like that. Can you exit here? Probably not. No one's here to buy anything you have. At some point, the market found some liquidity, and then the best bid and offer over. It's pretty interesting. Actually, if you just know how to read order books, I believe you have a huge advantage when it comes to knowing how much you can hold a trade. For instance, if you see you have support or not. But anyway, that's why I love order.